Quantum computing stocks are experiencing a significant downturn on Wednesday. Is this due to Jensen Huang's remarks on quantum computing, the market entering a bearish phase, or a sudden realization that these stocks are overvalued? Let's dive into the discussion. As of this video, Rieti stock has dropped 40%, quantum computing is down 38.2%, D-Wave has fallen 38%, and IonQ is down 31%. The first reason for this decline is quantum computing's announcement of a $100 million equity offering. Shares fell 21% pre-market after the company offered 8.16 million shares in a private placement at $12.25 per share, raising $100 million. Notably, the stock was trading above $17 in public markets just the day before. The proceeds are intended for working capital and general corporate purposes. Combined with existing cash reserves, the company believes it has sufficient resources to advance its photonics, thin-film lithium niobate, and quantum technology development. As I mentioned in previous videos, a rising tide lifts all boats, meaning that positive momentum, like Google's announcements, can boost all quantum computing stocks. Conversely, negative news can drag the entire sector down simultaneously. This isn't surprising, as I anticipated more companies raising funds at these elevated prices. For instance, Rieti raised capital at $2 per share, with restrictions on further fundraising for the next 2 months. We might see a rebound in February, depending on stock performance. The market likely fears that many companies will capitalize on inflated share prices to raise funds at premium valuations. While this dilutes shareholders, it's a logical move when stock prices are up over 1,000%. Previously, we also discussed how the AI options frenzy shifted to quantum stocks. However, there's a stark difference between NVIDIA and quantum computing stocks. A month ago, daily call volumes for quantum stocks exceeded 2,500, compared to NVIDIA's 400%. This reflects extreme momentum and greed in the sector. Let's explore this further. If you enjoy these types of videos, please give a thumbs up and subscribe. If not, I still appreciate your support. Lastly, a quick reminder. Looking at EV2 sales for companies like IonQ, Quantum Computing, D-Wave, and Rieti, the next 12 months are highly expensive. Even after a 40% drop, forward metrics remain steep, pricing in years of future growth. Congratulations to those who bought at these levels, and a special shout out to those who sold at the peak. Shifting to NVIDIA's CEO's comments, in this case I searched for quantum to see what was discussed, and it provided exactly what I was looking for. The analyst asked, "Thank you for hosting the meeting, Jensen. You've made some announcements on quantum computing. Can you share your perspective on how this technology will evolve over time, your strategy, and your long-term plan? Whether it's 5, 10, or 15 years, what distinguishes quantum computing from the accelerated computing platforms you've developed?" Jensen responded, "Quantum computing isn't a solution for every problem. It excels at small data, big compute, and complex combinatorial problems, but struggles with large data sets. The reason is that quantum computers communicate via microwaves, making terabytes of data impractical for them. So, working backward, quantum computing is ideal for specific tasks like generating truly random numbers or cryptography, problems that involve small data but require massive computational power. As a computing company focused on accelerated computing, we work with CPUs and have developed Grace. We're not tied to any specific technology. Our goal is to build computers that solve problems traditional computers can't. In quantum computing, for instance, you need a classical computer to handle error correction for the quantum system, and that classical computer must be the fastest humanity can build, which happens to be us. This makes us the ideal partner for the classical component of quantum classical systems. We're collaborating with nearly every quantum computing company globally, supporting them in 2 key areas: quantum classical integration, which we call Q2Q, and extending QA to quantum. They rely on us for simulating algorithms, designing architectures, and developing future algorithms. Overall, his tone was positive, or at least not negative. But here's the part I believe impacted quantum stocks. When will this become practical? In terms of qubits, we're likely 5 to 6 orders of magnitude away. If you estimate 15 years for highly functional quantum computers, that might be optimistic. 30 years could be too conservative, but 20 years seems reasonable to many of us. Essentially, he's saying that what's happening now won't be truly useful for another 2 decades. While many investors claim to be focused on the long term, the current stock prices already reflect years of future revenue potential. As I've mentioned in previous videos, if you're serious about investing in quantum computing, why not consider the big tech players? Sure, the smaller companies have seen significant gains recently, but in my view, those are short-term gambles rather than sustainable investments. Yes, one of these companies might achieve significant success 10 to 15 years from now, but if you're genuinely interested in investing in quantum computing, I believe the smarter move is to focus on the big players. That's my take. I do think that Jensen's comments, combined with the equity raise and some bearish momentum in the market, contributed to the sharp decline in these stocks. When you add it all up, it's not surprising to see a 40% drop in a single day. That said, we've also seen these stocks surge 50% in a day. So let's be honest, they're momentum-driven, almost meme-like in their behavior. They can skyrocket, but they can plummet just as quickly. Keep in mind, these are still companies losing money every quarter. No matter how fast their revenue grows, or how many flashy announcements they make on social media, the reality is that most of them are far from profitability. This reminds me of 2021, when companies were constantly making headlines with new developments. But the question remains, did those announcements actually translate into more revenue, or bring them closer to profitability? In most cases, the answer is a clear no. Speaking of Rieti, as we discussed in the previous video, there's been significant insider selling. And honestly, why wouldn't they? If your stock has surged over 1,500% in a matter of months, securing some profits is just common sense. If insiders are cashing out at these levels, retail investors should consider doing the same. It's about protecting your gains and putting money in your pocket, plain and simple. So, that's the big picture. If there are further developments, I'll likely share an update. I'm not rooting for anyone to lose 90% of their investments, but the truth is, these stocks were massively overextended, and it's time for a reality check. Share your thoughts in the comments below, and don't forget to like, subscribe, and all that. I'll see you in the next video.